So what do 90s heartthrob and action star Arnold Schwarzenegger and yesterday's federal budget release have in common? Nothing. They're both pretty hard to understand at times though. Welcome to the video, and in this session we're going to talk about the 2023 federal budget and how it applies to small businesses. Before I begin, a huge thank you to Joyce from Tax Nuggets Academy. This isn't sponsored, but she does amazing work. She managed to summarize the whole budget into one handy dandy sheet for me to summarize. I mean, I'd read the whole thing, but what do I look like, some kind of accountant? The first thing I'd like to discuss is the instant asset write-off, and specifically to answer the question that married people have asked since time immemorial. How small is small really? Under the instant asset rules, if you spend anything under $150,000 on an asset, you can write it off in this year if you are a small business. Up till now, a small business was defined to $500 million turnover. Now, if that didn't seem like a small business, this is going to be amazing. The new write-off threshold is $5 billion, meaning that Transurban, the company that owns majority of highways in New South Wales, is now officially a small business for this purpose. Get your head around that. The second thing I'd like to discuss is the small business technology investment boost. If you run a small business in 2022, you are aware that everything is moving to the cloud. To make things attractive to you, the federal government has given a boost to this expense. So if you spend money on things like your Xero subscription or cybersecurity, you can now add another 20% onto that expense when you deduct it. That is to say, if you spent $1,000 on accounting software last year and you spent $1,000 this year you can add another 20%, that is deduct $1,200 instead of just $1,000. No word yet on whether you can claim your OnlyFans, but watch this space. In a similar vein, if you spend money training your staff, the government has made it even more attractive to do so. If you spend $1,000 on training your staff, you can deduct $1,200. That's right, you can add 20% onto that expense and deduct it in your next tax return. One point to note though is the trainer has to be an accredited licensed trainer, and it has to be located in Australia, so you can't just make up a training scheme and deduct that. The next thing that caught my eye was the changes to the employee share scheme regime. Up till now, when a startup wanted to hire more engineers and they didn't have the funds, it was really difficult for them to issue new shares instead of wages. Because there had to be disclosures, there was a lot of red tape. The government has reduced the amount of red tape, meaning it's a lot easier to hire more staff using employee share schemes. The next thing that I think small businesses will love is the reforms to the PayG Installments regime. I know this sounds quite boring, but up till now, if you made a profit of $200,000 last year, the tax office will treat you as if you were going to make the same amount this year. If the pandemic has proven anything, if you made $200,000 last year, there is no guarantee that you'll make a profit, maybe not even that big this year. So instead of using last year as a benchmark to calculate how much tax you pay on a quarterly basis, they allow you to adjust that based upon your accounting software. I haven't seen the details of this just yet, but it should make it easier for people to keep a smooth cash flow, given that everyone's revenue is up and down at the moment. Now, here's the one I found really interesting. It's the changes to the fuel excise. Again, sounds really boring, but it's actually quite interesting. So there are two taxes levied on fuel in Australia. The first is the 10% GST, which we all know and love. The second is a 44.2 cent levy on every litre of petrol that we buy. Now, personally, I don't think it's that bad. All this money goes to maintaining the roads. And secondly, it means that those who use the roads more pay more at the bowser, such as the P-plater in the Hilux behind me in the left lane who just won't get off my ass. Over the last 2 months, we've seen petrol prices go through the roof. In December last year, we were paying an average of $1.60 per litre around the country. Last week, the average was $2.13. This is a huge increase in petrol prices. It puts a huge pressure on the bottom line of businesses and makes it hard for families everywhere. Petrol company CEOs have pointed to the war in Ukraine, general inflation, the pandemic, and maybe even their mother-in-law to explain the increase in price. However, when you look at the data, it is a different story. If you look at the cost of Mogas 95, which is the cost of petrol coming into the country, it has indeed gone up by 51%. But if you take a closer look, the margin on every litre of petrol has gone up by approximately 38%. Now, before you go down to the local servo and burn it down, keep in mind that the local retailer price is largely fixed. They don't have a lot of control over how much they charge at the pump. They charge a fixed amount on each litre. Yet instead of sicking a government task force on the price gouging that is happening in the market, the government has instead decided to reduce the amount of fuel excise on each litre of petrol, meaning that in the short term, you'll be paying less at the pump, but in the long term, your roads are going to suffer. And it also means the petrol companies don't have to suffer in their profit margins that have gone up by about 40%.